Welcome to Markets Now. I'm Michelle Rook along with DuWayne Bosse with Bolt Marketing, and we are seeing risk off in the outside markets, lower livestock futures, and we're kind of mixed in the grains. Soybean complex pulling back, but we're trying to hold on to gains here in the feed grain sector. And DuWayne, let's talk about the risk off in the outside markets. Obviously, the banking crisis has spilled over to Europe, and that's really got the outside markets shook up, doesn't it?
It sure does. Yeah, it started early this morning in our trade or late afternoon for the European trade. Yeah, more banking crisis issues and possibly some credit defaults. And it sounds like the government over there will have to step in to bail out some banks. But yeah, either way, that's got our equity market shook up. Really has the crude oil market tanking lower, thinking that it lowers global economy and global demand there. And it always seems like money flow affects soybeans. So soybeans are down pretty hard today, but corn hanging in there.
Yeah, we should talk about that because with crude oil down over $4 and you've got the dollar screaming higher, corn is holding up quite well. And why is that? Is it because we got additional China business this morning? I think we're at 50 million bushels now in the last 2 days?
That's right. Yeah. 2 days of export sales flashes to China. That's what the market really needed to see, or the bulls sure needed to see. I think that combined with, to me, what is a bullish commitment of traders report released yesterday afternoon. We're still way behind on those commitment of traders report, but this one was as of February 28th. And we found out that the managed funds anyway, liquidated like 148,000 contracts, a record dump of long positions, put them down to like 64,000 long. And when you kind of look at the trade action since, I think the funds are possibly flat right now. That news alone is actually a little bit friendly to the market, at least to me it is. And it started our corn market up 5 cents last night on a gap opening because people feel like the funds are flat now. And if we do have a weather scare in the US or some sort of scare, for some reason, the powder keg is dry, you could say. They have a lot of buying power going into the spring now.
Well, and in fact, you are actually talking about a little bit of a weather scare with some planting delays expected up in the Dakotas, maybe even Minnesota with all the snow you've had there.
Yeah, it's definitely been a tough last month up here. It seems like every other day we don't have school and we're getting pounded by snow and wind. And it's just one of those freak things. Now, it's not everywhere, of course, but yeah, right along the North Dakota-South Dakota border, there is a huge snowpack. And this winter, I mean, I've talked to you a little bit about prevent plant, and I think USDA is really just assuming the prevent plant acres will be sharply lower due to the drought last year. But that's not always the case. In 2013, after the 2012 drought, we came back and had 8.3 million acres of prevent plant. And with the huge snowpack up here, I think we're going to have above normal prevent plant, at least in my area. So yeah, I think you're going to start talking it's too early to talk planting delays, but I think that weather problem that the funds could buy corn, it could be just right around the corner.
So wheat is also holding up here. It looks like it's been trying to bottom the last couple of days, and we're doing this in the face of this sharply higher dollar index, and we're still looking at some of these headlines out of the Black Sea deal. So what are we trading right now in your mind?
Yeah, I think it's really impressive to see wheat holding its own with the dollar up like that. When the dollar's up over 1,000 points, usually wheat crashes by the end of the day. But we got to remember, where are the funds in that market from February 28th, where we think they're at. We think they're massively short the wheat market. And if they're having to exit grain positions to margin call equity markets, say the crude oil, they have to buy back their wheat position. So I think that's all that's happening here, Michelle. You're just getting profit taking or short covering in the wheat market. But I don't care as long as it puts a bottom in wheat. Eventually I think spring wheat has an acreage battle to talk about because of all the snow you mentioned up here. That's where the spring wheat gets planted, and we like to plant it early if we can, and early just isn't going to happen.
Yeah. And to your point, when you see this short covering, it's probably because of money flow, because of the outside market. So that's a really good point that you make. And as you said before, money flowing out of the soybeans as a result of that, and the funds maybe are still long in that market. So we've taken out the 100-day moving average in May beans today. Where's the next support area?
I call the next support area the recent lows we've hit a couple other times we tanked down here. That's that 1475 for May soybeans. We really want to see that hold today. I hope it does. But yeah, like you said, it's more about money flow today. It isn't really about the chart. It isn't about the tight old crop situation or the big Brazil crop size. It's just people getting out to move money around. But technically, I can say it's just money flow and not a big deal. But the problem is what you're mentioning is the damage can be done to charts, and that can make people the next day not want to buy. So I really want to see us hold that 1475 for a bull.
And risk aversion, spilling over into the cattle and hog sector today too, isn't it?
Yeah, it sure is too. Weaker market there. So far this week, I've been impressed how cattle have held up with all this bank crisis, equity markets fallout. Usually the livestock markets are the first to follow and go sharply lower. Accelerated a little bit today when I saw you reported that cash cattle are trading a little bit lower this week, about a buck lower in the north, and I think a buck lower in the south. So, but that's still, when I look at the April board, I feel like the April board is too low compared to the cash market here now. We're actually at a bit of a discount. So I look for that to find support very soon. Maybe that 161.15 area, April live cattle should find support. But it's easy for me to say that. I'm also hoping we don't find another bank tonight or tomorrow that's in crisis too. So we need to get this bank crisis kind of past us.
Yeah, but it was disappointing, as you say, to see the 164 cash trade. Boxes a little lower here at noon. You can't fall too far, though, because we've got cattle on feed coming up on Friday, which is expected to be, I think, pretty bullish.
It is. I haven't seen the official trade estimates yet, but I would assume, on feed, we're probably still off that 4%. Placements will be an interesting number, and marketing should still be high. That commitment of traders report I brought up a couple times in this interview actually showed that at the end of February, the live cattle were the one contract that I think the funds weren't massively liquidating. They actually bought a little bit more, which is probably why it can go down a little bit more now, because they've got some longs to get out of there. But I don't think they want out of the cattle market. I know we always put in a spring high, and it seems like we tank this seasonal time frame, but I don't think we can go very far in this cattle market. We just need the equity markets just calm down a little bit, and I think we can resume an upward trend in cattle.
Yeah, and the hogs got caught up in that here today as well. All right, thanks for joining us. DuWayne Bosse with Bolt Marketing, and that's Markets Now.